crypto can't self-regulate in the sense of offering some degree of consumer protection. Regulators are certainly going to notice. In fact, that's a good conversation to get into with our next guest, who was a former regulator. She has a bit of news this morning as well. Former CFTC Commissioner Dawn Stump is joining crypto risk monitoring firm Solidus Labs as an advisor. The appointment reflects the broader trend of former top government officials taking roles at crypto firms after departing their public service roles. Joining us now with more is Dawn Stump. Dawn, thanks for joining us. So would love to hear off the bat, about your decision on why you want to switch from regulating crypto to now advising crypto. What can you tell us about your new role?
Yeah, well, first of all, thank you for having me. I'm thrilled to be here. This is one of my first public appearances since having left the CFTC in April. And I knew when my term ended in April, that I had quite a bit more to say about not only crypto, but markets in general. I have had a passion for well-regulated markets and safe markets and transparent markets, all of the buzzwords you guys were using in the prior conversation. And so when the opportunity presented itself to work with Solidus, I was thrilled. They have, in fact, been such a remarkable resource to me when I was at the agency. Their commitment to helping the market infrastructure provide and monitor threat intelligence is really critically important as we see more and more companies seek to enter the regulated space, those infrastructure providers who are supporting the crypto market. I mean, the reality is markets are very dynamic. That's why we call them markets. But market infrastructure providers have an obligation to distinguish that market volatility from manipulation and other unwarranted market disruptions. And I think that is something that we're seeing those who are serious about the longevity of their offering seek to achieve. And I think Solidus is really well positioned to help. And I also have to say, two of my personal priorities when I was at the agency were cybersecurity and consumer education or customer education. And I'm also very impressed that Solidus is very committed to not only advancing their own product, but ensuring that the marketplace is well educated. And their founders have a great experience in the cyberspace. So I think it's a really great opportunity for me to continue what's important to me with like-minded individuals who've already demonstrated a sincere dedication to advancing market integrity. So I'm excited to help them advance that cause.
Well, we're excited to have you here, Dawn. Just piggybacking off of our earlier conversation, we've seen a lot of crypto companies collapse recently, such as Celsius, Three Arrows Capital, as well as Voyager. So you're talking about risk management. What kind of risk management or regulation would prevent the insolvency problems that companies like these are facing?
Yeah, so I think there is an opportunity here to have a conversation about how consistent oversight might help maybe not eliminate, but help mitigate some of these things that we're seeing happen with these companies that are struggling to remain solvent. And I think once regulators are able to better clarify and define the registrations that these companies need to be obtaining, the licenses that they need to be obtaining from U.S. regulators, then those who are serious about offering these products will be able to register with whether it's the CFTC or the SEC or perhaps other regulators, depending on what the offering exactly is. These registrations will then bring about some need to comply with a set of principles. So for instance, at the CFTC, there are principles relative to financial resources. There are principles relative to the protection of customers' assets. There are system safeguard principles that would all need to be adhered to once a license is issued. And the license, in the case of the CFTC, may be for the trading platform, or the clearinghouse, depending on if that's a necessary element of the market structure. And I think those principles, they're flexible enough, at least in the context of the Commodity Exchange Act, which the CFTC is governed by, to permit these folks to do what their customers are demanding, but in a more transparent. I'm going to use your words again. I love the word transparency. A more transparent and consistent way, such that those customers who are trying to take advantage of these products have some better a high degree of confidence as to the oversight that's being conducted. You know, in an agency such as the CFTC or the SEC, once these registrations are obtained, there are periodic, what we call rule enforcement reviews or examinations, and that's when CFTC or SEC staff would be on site and engaging with those infrastructure providers. It's a back and forth. There are typically findings of insufficiencies, and there's a conversation about what needs to be done to correct those things in order to ensure compliance obligations are met. And I do think that this marketplace has reached a point at which those sorts of principles should be applied in a consistent manner.
So, Commissioner, what happens exactly at the CFTC? It just seems like everybody there now is really into crypto, and I don't know. Maybe I'm like kind of, you know, you'd think CFTC, okay, they'd be into some commodities like, you know, the traditional commodities of grain and agriculture kind of stuff, or energy. But it seems now every time, you know, maybe it's because we just see like a filtered portion of it, you know, being that we're crypto broadcast, but it just seems like a lot of people there are really into crypto. And do you think that has a role in, I don't want to say a land grab here when it comes to regulation, but you know, do you think that it maybe informs us of how you know, the CFTC approaches the crypto markets and takes a more, you know, I don't want to say proactive, but sort of says, hey, this is our turf here. We know we know this industry, SEC. You guys are, you know, go stick to your boiler room operation regulations and stuff like that. We'll handle crypto. Is that what's going on there? Like, you guys all talk about crypto, like, yeah, we should do this.
Well, I'm so glad you asked, because it became almost a mission for me before I left the CFTC to try and clarify what the CFTC can and can't not do with regard to crypto. And I've spoken of that repeatedly, and it's certainly available publicly. But I think what's happening is not necessarily a power grab, but almost a desperate call from the industry for clarity in what the regulatory expectations are. And I think the CFTC and the new commissioners and the chairman are trying their best to offer constructive solutions. I do think it needs to be pointed out here for the viewers that the CFTC has been, for quite some time, heavily involved in regulating crypto, and I think you have to distinguish the crypto derivatives market from the crypto physical cash assets market to understand that. So the CFTC has today and for some time has been regulating crypto derivatives, or the infrastructure that supports those futures and OTC swaps markets. And Chairman Benham is right to remind people that the CFTC has been doing that for quite some time. And so I think initially, when we were all asked and repeatedly asked to speak about crypto as CFTC commissioners, that's what we were focused on. And then there became this really interesting discussion about who was going to regulate the physical cash assets. I think there was a misunderstanding for quite some time by some customers or some investors that the CFTC was already doing this in the case that some of the underlying assets might be commodities. But the reality is that the CFTC currently doesn't have a clear mandate or authority to regulate those underlying physical assets. They're regulating futures on the assets, but they're not regulating the cash product, the actual physical Bitcoin. And that's where Congress will have to make a decision. So when I hear people, you know, oftentimes people will ask me if I think the CFTC is making a power grab by telling Congress that they are capable of regulating this new space, this cash market. I don't necessarily consider it a power grab. I actually think the CFTC commissioners are to be commended for their genuine dedication to solving this problem. And the market is desperate to know, who are they supposed to register with? How are they supposed to go about complying with, in some cases, rules that they've already been subjected to enforcement actions, based upon certain rules. And I think that's where the CFTC is a market regulator, just as the SEC is. The reality is that there is no clear distinction right now between commodities and securities in the crypto infrastructure. And Congress may have to step in and make those distinctions in order to determine who regulates what. But the CFTC, unlike the SEC, does not currently today have the authority to regulate commodity assets. They regulate commodity futures. So that's something that I think is obviously under consideration.
This is really,
I have lots of thoughts
you're raising
about
some
that.
really You're raising a lot of great points. It's interesting because there's definitely like a discrepancy between how the media presents this and how regulators or former regulators present this, because the media is very much like the CFTC is taking over crypto, and any regulator or former regulator who've had on the show is like, no, it's not that. So, but putting aside like the power grab language for a moment, I mean, it does seem that like there's at least one bill out there that's basically suggesting that the CFTC is the primary regulator of spot crypto markets, right? So not calling it a power grab, but that does seem to give the CFTC more authority over crypto markets than it has now. Is that incorrect?
Absolutely. Those bills are 100% providing the CFTC with a new authority that they don't have today, much like the Dodd-Frank Act provided the CFTC with new authorities to regulate over-the-counter swaps markets that they previously didn't have. And so I think the discussion that is occurring now is again a result of the marketplace going to their members of Congress and saying, this is all very confusing to us. We are not certain who we should be seeking out as our regulator, who we should be seeking license from, who we should be obtaining regulatory oversight approvals from. And so Congress did what Congress should do, respond to their constituents by developing legislation. And you're right, I think many of the bills would suggest that to the extent the actual crypto asset is a commodity, that the CFTC would regulate it, and that would be very different from the authorities the CFTC has exercised in the past.
But if I understand correctly, one of the proposals out there is actually to put crypto exchanges in the U.S. sort of under the purview of the CFTC, right? But what I don't understand is that there's still so much, you talk about clarity, there's still so much confusion about the individual assets at these crypto exchanges. There's like active debate about them right now. So like, how does that work? Like, how would the CFTC regulate a crypto exchange if it's still unclear which of these assets at the crypto exchange are designated as securities? Because there's active debate going on that now. So if you have a mix of Bitcoin, which we know is not a security, but then others that may be securities, how would those fall under the CFTC purview? Like, I'm very confused about how that would work.
Yeah, well, they wouldn't. The CFTC they are not, if it's deemed to be a security, the CFTC by statute is not the regulator. So the SEC, as you all know, is the regulator of securities. I think the confusion that exists is, are any of these things securities? And I think at least one exchange has now petitioned the SEC to tell them what they would consider to be a security. There seems to be some notion at various regulatory agencies that it's clearer than I think the industry thinks it is. And so again, I think that's why Congress is involved now, because there were contentions by regulators that it's very clear this is a security, or it's very clear this is a commodity. And I think the marketplace didn't see it that way. They didn't see it as being very clear. And so they've gone to Congress to ask them to clarify. And again, as long as something is a security, it will be regulated by the SEC by statute. But the SEC may have to put more parameters around how these things are deemed to be a security. In other words, the Howey test is not maybe as clear in the context of crypto assets.
Maybe it could be updated, after 100 years. But just quickly, we got to wrap, but I just want to fit this in there. If the CFTC does end up regulating crypto spot markets or crypto in a more expansive way, do they have the resources to do that?
No.
Okay.
I think they learned this lesson the hard way when they received extensive new authorities under the Dodd-Frank Act to regulate over-the-counter swaps markets. And I happened to have been working on Capitol Hill at the time, and there were many conversations about how on earth this would occur with the existing resources. And so I think the chairman of the CFTC has rightfully pointed out that this new authority would need to have some mechanism for securing additional resources.